Okay, problem 4 is a really good review of closing entries. Now remember, our whole goal, what we're trying to do with closing entries, is we're trying to get the results of operations, those temporary accounts, those nominal accounts. We're trying to get all of that, figure out what the results of operation were, and then move it all to retained earnings. Now, some textbooks literally take the retained earnings and they start with that and they add all the credits and subtract all the debits, and that gives you the ending balance in retained earnings. And while that will technically give you the right answer, and it will be, not technically, it will be the right answer, that is not in good form. That's not the way accountants do it. We do it using the General Journal, and we use an account called the income summary. And the income summary is the most temporary of all possible accounts. So our first task is to close our revenue and an expense to income summary. And we do that by debiting the revenue, $920,000, debit the interest revenue for $6,000, and credit income summary for $926,000. If you're like me, you like T accounts, there's our income summary account, and we now have $926,000 credit to income summary. Now we're going to debit all of our expenses to income summary. So we have to credit the expense and debit income summary. So our cost of goods sold is $505, our salary expense is $160, our rent expense is $32. So we're going to credit all of those. So we're going to credit $505,000, $160,000, $32,000. Our depreciation expense is $47,000. Our interest expense is $6,700, and our insurance expense is $7,700. So what we've done is we've taken all the expense accounts and we have credited the expense account and debited income summary. So when we add up all of those expenses, we find that they all add up to $758,400. And that's a debit to income summary. Now, just like we talked about in Accounting 1, to balance the T account, you subtract the little number from the big number and write the answer under the big number. And when we do that, we come up with $167,600 in income summary. That is the most temporary of all accounts, because once you open it, you use it, and then you close it, and you close it to retained earnings. So we're going to have one final journal entry where we close income summary by debiting income summary $167,600, $167,600, and credit retained earnings $167,600. That's the closing process. And if you take the original set of numbers that we talked about and you add all of these and subtract all of these, you will come up with the ending balance, which would be $167,600 plus the opening balance of $97,000. The problem of doing it directly is you don't actually get an income statement for this year. Come up with the right final answer, but not in good form. Doesn't make FASB happy.